Hi, my name is Bob Gersh with East Coast Capital. And the other day, I did a presentation regarding uh, various costs which are related to housing and how there are many options to be able to reduce potentially your housing costs. And I went through a number of what I consider the housing expenses, but one that I didn't address the other day was homeowners insurance. And that is an important and significantly large part of your monthly housing costs and your annual housing costs. So I wanted to go over that today. And basically, when you look at your bill that you get once a year, now you may get it, you may be paying on a monthly basis, you may be paying on a quarterly, it may be once a year. The policy typically is for a year. There are some insurance companies which do 6 months, but you do get on a periodic basis that policy. What we're suggesting is that you take that policy and compare it with your previous policies and see what the trend is. Is it going up, staying stable? Are there any differences in the coverage? You may also, within the coverage, and again, I would strongly suggest you talk to your professional insurance advisors regarding what we're talking about today. Having said that, one of the items that we would want to make sure is that you have a provision which says what your coverage would be if there was, let's say, a fire or any kind of issue. It could be that your roof starts leaking. It could be basically that things happen within your house which you consider to be covered under the policy. Are they replacing, if you lost your whole house, would they replace your house the way it currently is? Some policies adjust upwards to cover the additional costs over a period of time on the house. Some you have to actually ask for an increase. But you want to look at what your coverage is. As time goes by, you may be underinsured because you haven't had an increase in the coverage, but the value of your property has gone up and the replacement cost has gone up. So you want to make sure you have that replacement cost and it's covering. Typically, if you get a mortgage, the mortgage company is going to give directions to the insurance agency as to what type of coverage to make sure the mortgage is covered within the policy and the amount does cover. So again, you want to talk to your insurance agency and agent for further details regarding make sure that coverage is adequate. So that's something that can change over a period of time as cost of replacement goes up, depending on the type of policy, how that's being covered. You also want to look at any other provisions that are in there. One provision, which is an important provision here in Central Florida, is sinkhole coverage. So you'd want to go over to have your insurance agent define for you what exactly you're covered for. There are different provisions depending on the insurance company and the policy you took out. And based on all that, there are different costs. So you'd want to go over that with your current insurance agent or expert in those areas and make sure that there aren't any changes adversely to you and understand what the pros and cons of the different coverage and the costs. You also, depending if you're dealing with an agent that just represents that company or represents other companies, you may ask for your policy to be reviewed and to get quotes from other companies. Now, depending on the agency, one agency may be able to do that for you. You may also find that it makes sense to take that particular policy you currently have, if the agent only represents that one company, and check around, get some references, referrals, and contact a couple other agencies and get some additional couple quotes. So you have at least 3 quotes. So now you can compare benefits, cost, and when we're looking at, which we did on the previous discussion that we held on the burden of housing costs, and the 2 out of 10 houses or households are overburdened with these costs, and there are various options of what to do as far as refinancing to extend the term and therefore reduce the payment, to potentially reduce the interest rate, to be able to change the program that you're in. Maybe it's for a reverse mortgage and have no principal interest payment, but you have all these other costs which you also want to be looking at. And as I had said at the beginning of this episode, that homeowners insurance is a big item to be included in that review, and therefore you should on an ongoing basis be looking at what you're paying. You may find that prices are going up in a particular policy and the trend is up and it's becoming expensive. You may look at the pros and cons of what coverage you have versus what you're paying, and to look at other companies for competitive purposes to make sure you're getting the best deal. Again, even if you're very, very happy, and it's very subjective on insurance, because you get the policy, you get the benefits potentially in the contract at least, and the reality is that you're really hoping that you don't have to use them, that there's not a need for a claim. It's only when something happens that you're hopefully have the right coverage. So it's one of those items that it's not like you go and purchase it off the shelf, pay for it, and then utilize it, and then say, I'm satisfied with what I just purchased. It's a case of you're paying and you may, for many years, never have a need to call the agent for purposes of a claim. But you should be checking on that cost on an ongoing basis. So once a year, you should do a review of your policy, what the coverage is, make sure it aligns with what you need, and that the cost factor works for you. If you end up selling a property and downsizing, buying another property, at that point, clearly you'd want to look at the different policies that are available for your coverage. And if the price value is less on a property you're downsizing to, then hopefully your cost of insurance also goes down somewhat. But again, depends on the policy, the agency, the kind of coverage you're getting, what's included in that. So lots of different variables. So that's the thought for today. Get 3 quotes at least once a year, and review. The quote is not just the premium, it is also what's in the coverage. So you look at the whole package and make a decision. That way you can hopefully save within budget and control that budget, and not just take it as it comes. And it's like getting the bill in the mail and it's automatically paid, maybe through your checking account, don't even open the bill. Look at the bill, compare it to the previous ones, so that you know you're in line with what you're paying for that house, part of the housing costs, the homeowners insurance. If you have any questions, please feel free to give me a call. It's Bob Gersh with East Coast Capital, and I'm here, and let's see here if I can pull out my, keep doing this, phone number, 352-561-3096. And hope everyone's safe, well, family's okay. And if there's anything I can do for you, give me a call anytime. And have a great day and a great rest of the week. Thank you. And let's see here. How do we say goodbye?